Hello and welcome to this Fintech Futures video interview. My name is Alex Hamilton, Deputy Editor at Fintech Futures, and joining me is Peter Dehaan, New Business Director for Cash and Liquidity Management at SmartStream. Welcome.
Yeah, thank you, Alex. Thanks for having me.
It's great to have you on. And we're going to start with the quintessential question about the pandemic and COVID-19. Obviously, it's caused a lot of disruption for a lot of firms across the industry. But how has it affected financial institutions and the way they handle their liquidity? Have they handled it well?
So I think it's been 10 years since the last crisis. Some have handled it way better than others, but that's a given, really. Understanding some of the framework that some of these institutions are built on. So the way that I've kind of looked at the pandemic is essentially like a natural disaster. So it happened immediate and overnight. It changed the dynamics of how people are working and how banks had to kind of banks and other financial institutions had to deal with liquidity. I think the key thing is that if you look at it through forecasting and visibility, and then an example would be where we've seen in the early days, a lot of revolving credit facilities drawn down on at various different institutions. This created a whole raft of different issues and concerns for banks, which culminated in some occasions them having to completely realign their processes and in a way create what I'd call a banking track and trace process, to coin a phrase that can and cannot work.
So one of the problems that financial institutions are facing right now is data latency, which can often evolve into liquidity latency and see firms struggling to know what to do with their cash. So what kind of technology is available to mitigate that problem for banks and financial institutions?
So I've been thinking about data latency vis-a-vis liquidity latency for quite some time now. And I always kind of thought to myself, which is the greater or lesser of the two evils? You can have conversations with treasurers and you get their opinion, and you speak to operational heads and you get their opinion. So maybe they aren't so evil, but they're just kind of used in different ways. I think from a SmartStream standpoint, we love data, however latent it is, and that's evidenced in the systems that we have in place and the processes and the operational infrastructure we have set. We look after collateral management, we look after reconciliations, we look after corporate actions, we look after reference data. Obviously cash and liquidity, which we'll come on to in more granularity shortly. Fees and expense management, and also our award-winning AIR, which is artificial intelligence reconciliation systems, which are all there to kind of lap up all of the latent and not so latent data that we have. So I suppose once we also look at other firms and what they're doing, I think you need to really identify on upstream and downstream systems and how really frail, vulnerable and exposed they really are, and that kind of brings the is it data or is it what is the worst of the latencies that have caused the problems. So when we look at it through a cash and liquidity management lens, and we've been speaking to a lot of global banks, from the largest global banks to some of the smaller regional banks for a long time now, to understand what they're currently doing, what they think they need, and when they need it by. And we've been able to build a modular platform and process which has benefited a whole bunch of clients across real-time balances. We've been able to create robust processing, which has led on to reduction of liquid asset buffer. You've reduced your manual intervention and ultimately costs associated with that. And it's also enabled further redeployment of personnel, where you've kind of refined some of these processes. So once you've kind of overlaid that, along with the the way that we've incorporated the new changes to regulations, ISO 20022, we've thought about this pretty carefully.
So this question is a bit of a two-parter really, because there are obviously huge macroeconomic risks that financial institutions have to plan and prepare for, and oftentimes that involves using a lot of technology to predict what's going to happen, and not with 100% accuracy, but being able to prepare is crucial. And on top of that, we've also seen that regulators have been extremely cautious with how banks have reacted to the pandemic. There have been concerns across Europe and the world where the regulators have been worried about the liquidity of financial institutions and their capability to weather any future crises. So, one, how can firms use data and technology to predict and prevent macroeconomic problems? And two, do you think regulators are going to continue being heavy-handed with firms into the near future?
I think, well, if we go back a couple of years, we've seen some big fines imposed on some of the bigger banks for not adhering to the regulations as they should, and they've been pretty well publicised. The regulatory landscape is changing, as we know, perpetually. There's a lot of interpretation that's kind of taken out there, and it's our view vis-a-vis their view, etc. So, and I think as kind of firms are looking at what they should be doing and what they should be placing, I think there's a certain amount of a lot of this stuff has been blurred, the tactical versus the strategic approach. If you look at the way there's been lots of cheap central bank funding. So we've seen that come in, so 4-year money, Bank of England would be the greatest example, 4-year money that's come into the market where it's been able to be drawn down, and that's just kind of exacerbated books, and people have had to manage money in different ways, and that's led on to what we would probably previously called unknown unknowns in the what's out there space. But if we call them undefined unknowns, people are starting to mitigate for these. Now, we have obviously stress testing modules that we provide to our clients that are more manoeuvrable, more flexible, look outside the generic range of stress testing and the configured or predefined rules that banks are conforming to. So I think there has to be a bit of a 30,000-foot view of where we need to take some of the additional stresses and what's out there. I mean, 10 years since the last crisis, and we're dealing with the new one now, or coming to the hopefully the end of the pandemic. So I think we're in a situation where fine-tuning exactly what's what. I think the way that people have been bringing other people from other organisations into banks, into technology, with new visions and new ideas and how it's worked over here versus over there, it takes a different slant on it, and people are able to look at it through a different lens.
So we've talked about a lot of concerns. We've talked about macroeconomics, obviously, we've talked about COVID, and we've talked about regulators, but SmartStream deals with a lot of financial institutions, from small firms to large firms in different geographies, across different channels. What are the concerns when you're going to these companies are they letting you know about, and how are you helping to solve them?
So I think foremost is banks are still driven by metrics. They're trying to drive through a liquidity lens again, they're trying to drive their loan to deposit ratio where that needs to be. They're trying to drive their liquidity coverage ratio where that needs to be. And it's a lot of metric driven processes. They're ultimately trying to lower their liquid asset buffer. They're trying to reduce their costs on high quality liquid assets, which is key. So that's the overarching point. When it comes to investment, they're looking to get return on investment back within 2 to 3 year window. I think that's kind of come in from where it's been historically. But banks have made they've been able to position themselves in a stronger point now. We've gone through a year and a half, coming on for 2 years of this pandemic, a lot of money was laid out by banks on the outset, but they're now in a more comfortable position financially than they ever have been, because a lot of banks made a lot of money, so they're now ready to invest. An example I went to speak to a client recently, and I asked the question, what is your current state vis-a-vis your future state? He said, my current state is Excel, my future state is not Excel. And I was like, well, I think SmartStream will be able to help you here, because we've got some tools and processes and software that can take you to the next level and be able to build a resilient, robust framework for your institution. So that's worked well. I think there's also been as outsiders looking in, a number of people have believed that because the market is awash with cash, that liquidity has taken a back seat. This is far from the truth. However, whether you're, as a treasurer, you're long or short in your book, you still need to have the discipline to manage your liquidity management as accurately as you possibly can. So going back to investing and where we see the future, what the pandemic has brought to light is that a lot of banks have a lot of antiquated systems that aren't really fit for purpose. So when you've got the age-old question, buy, build or upgrade, I think the upgrade component has kind of gone out, and which leads you to buy or build. So you've got a question to yourself, how appropriate is it to build on a system that's there when you can be working with technology partners who are forward-thinking, who can take you to the next level. I think another point to add would be that if we went back 18 months and some of the questions that have been discussed around cloud-based solutions and cloud-based deployment, the conversations would have been few and far between, and people would have been quite standoffish. I think that has fundamentally changed, and people are a lot more open to using cloud-based technology and cloud-based support. So,
brilliant. Well, some excellent answers there, and a great summary of how the industry is changing in the way it manages its liquidity and how new technology can really help banks push forward. Peter, thanks very much for coming on.
Thank you, Alex.
And thanks for watching this FinTech Futures video interview, and we'll see you next time.